People tend to associate Forex with making big money fast. But Forex isn't what you think it is. In this video, we are going to discuss this and more.
Forex is not what you think it is, and you may be thinking why. So let us discuss and see what is the deal first. First of all, we have to define what Forex is. Forex is acronym for foreign exchange. You can see here, foreign exchange. These two words combined become Forex. So the exchange is the transaction, money to money, currency to currency. So one pair of currency to another pair of currency. And then the foreign, because this Forex most of the time has something to do with different countries interchanging their money. So Forex is a global market that allows exchange of one currency for another. Most of the times, Forex are traded by exchanging one currency to the equivalent of another country's currency. So most of the time, the currencies, they go in pairs. So for example, we may have like Euro USD, like this. We also may have GBP USD. So most of the time, Forex cannot be traded by only one currency. Most of the time when you are trading between two currencies. If you are buying Euro, this means you are selling USD. If you are buying USD, this means you are selling Euro. So most of the time, the way we trade is we buy the stronger currency and we sell the weaker currency. If we know for some reason that Euro is going to go up and Euro is stronger, and we have a good data that is telling that the Euro is very stronger, then what we're going to do is we are going to buy the Euro while we are selling the USD or United States dollar. This kind of orders are called when we are going up, we are going long, and when we are going down, we are going short. If we know for some reason that the Euro is weak and that the US has more better economic data, for some reason with our technical analysis, if we find out that that Euro is weaker, then what we're going to do is we are going to use short in this short position. We are going to take the short position. So most of the time when we are trading Forex, we can trade both ways. We can win by trading both ways. We can trade up and we can trade down. So down is short, and when we're going to go buy, we are going to long or buy, and here sell or short. Okay, so that's wonderful. If we compare the Forex with other markets, other financial markets, for example, let us take an example with New York Exchange. New York Stock Exchange is the biggest stock exchange in the world. So we have 22 billion daily volume in the New York Exchange. So you can see we have 22 billion. So this is actually huge if you are trading stocks. But what we can see is that the Forex, the daily volume, the transactions, the money that goes in Forex per day is 5.1 trillion US dollars. So you can understand this money, this even can go higher than this number. But the point is, what we are talking here is trillion. It is not a billion. You can understand with 2 to 3 days of Forex, the transaction or the daily volume, the volume of a Forex within 2 to 4 days might reach the whole GDP of the United States. Now, United States GDP is around 19 trillion. So 19 trillion, you can understand that 5 times 4, we can reach more than 19 trillion within 5 days. So Forex is the largest financial market that exists in the whole world. But although it might seem simple, it has a lot of tricks. So now, since we have defined what Forex is and how huge this market is, now we are going to talk about why Forex is not what you think it is. So there is a formula called 90, 90, and 90. This calculation has something to do with retail traders. So we are talking about here retail traders, retail trader. Retail traders are people like you and me who are trading themselves with their own account. The account could be huge, could have a good balance, huge balance or small balance, it doesn't matter. But we are retail traders because we are not institutional traders. Institutional traders are people like hedge funds and investment banks and other financial organizations like that. But most of the time what we're talking about is retail traders. So when we talk about retail traders, and probably I think that you are a retail trader, so this formula says that 90% of the retail traders lose 90% of their money within 90 days of trading. You can understand. This means within 3 months, we were talking about the new retail traders. We're not talking about the people who have been there for a longer time. So what we're talking about here, within 3 months, that 90% of retail traders who join to this market lose their money, 90% of their money or initial capital within 90 days. So this is the general formula. So, but the point is, people may still lose their whole money within 1 month or maybe within 15 days or things like that or something like that. So you can understand that there is a big risk here. As well, there is a big profit. So everyone is telling you, but nobody is showing you. So most of the time, people are telling that this is a very profitable market, that this is that, but nobody is showing you. Okay, nobody is showing you the problems, the things that go around, the secrets, the way that you have to deal with this. So it is very simple to enter into this market. You can join today, open a Forex broker, or you open your account, or you open your Forex account with a preferred Forex broker. But that Forex is simple doesn't mean that you will make money. You see, the barriers to entry is very simple, but that doesn't make Forex simpler. In fact, Forex is difficult, and you will need a lot of things in order to win. So you may be wondering first why people are losing most of the time. Why they are losing 90. Why is this formula is important? This is because people simply join Forex trading by not understanding Forex as a business. But most of the time they are simply entering Forex because they want to make huge money within 5 days. Each industry that you join, you need to learn about that industry. You need to know the basics. You need to know the tricks. You need to know what it takes to be top 10 of your industry. So same goes for the Forex. You need a lot of things, but these people, they don't understand this, and that's why they simply join the market and they lose. But the good thing is that you can be your own company if you know how to play your card as well. So if you can master your trading skills and understand Forex as a business, not as a place to gamble, if you can do this and you win for some reason, then you can be the boss of your own company. No one is going to replace you, because this is you playing with your hands, with your computer. So this could be actually a rewarding job. This concludes our video, and I thank you for viewing. Also, please, if you are new to our channel, please subscribe, and thank you.